in-depth view of the markets and how they're trading for today. For that, I'm joined by Kyle Burgess, Portfolio Manager at Nedbank Private Wealth. Kyle, always good to have you, and thanks for making time.
Oh, good to see you again.
Let's pick up on the market activity. Again, at least some strength may be coming through from the rand, which has been sustained, even though there's a interesting pot of dynamics unfolding from a global and local perspective.
Yeah, certainly is. So I think, as you pointed out, the gold price at the moment is quite comfortably above 13,000 or 1,352. A couple of weeks ago we were talking about it. It was really struggling to break that 1,300 level. So it's broken that quite comfortably. And with the stronger rand, we've seen quite a lot of activity around NASPers, as you mentioned earlier. And then resource counters together with the gold price have also been moving quite a bit. But I think it's not unusual when you get to these sorts of levels in the market. Just kind of been a pretty soft week, sort of overall. I think globally and locally, it's not really finding much direction, unfortunately.
What does this mean for some of the company results we've seen? Let's pick up with financial services firm FirstRand, out with some numbers, but of course pointing to the very bleak macroeconomic environment which impacted on lending for them.
Yeah, absolutely. So I think their released numbers are 8% higher, which is pretty solid. A lot of market commentators are watching, or investors are watching that ROE number. So still, quite comfortable at 23%, which is really good, especially for business that operates in South Africa. They did allude to sort of some softness in their sort of African businesses. But these are sort of subscale businesses, and so once they get those businesses up to scale, I'm pretty confident that those ROEs will be well above 21% at least. So not all sort of bad news on that front.
If we also take a look at the likes of African Rainbow Capital, just listed yesterday, a lot of competitors, or rather commentators, saying this is Patrice Motsepe's Berkshire Hathaway, so to speak. Is there an opportunity for investors to get in here?
Yeah, I think, like any good investment, you really need to watch out for what you pay for it. So I think they placed the shares at R8.50, so they're raising about 8.5 billion. So very interesting opportunities in terms of the companies that they're listed in, obviously having access to sort of BEE businesses, BEE deals. So that's sort of a niche play on that. So if you look at, just in terms of their fee structure, and a lot of these investment holding companies do charge quite sort of hefty fees. So on listing, so they've raised 8.5 billion. Of that, they'll be charging 1.75%, if I'm not mistaken. As soon as they get sort of above a threshold of 15 billion, they'll then be dropping that to 1.25%.
Sure.
But on top of that, they're also taking a 16% performance fee if they perform sort of above 10%.
That sounds steep.
Yeah, so it is particularly steep, and I mean we've seen these sorts of arguments, come out before. Ethos Private Equities, and ARK Investments is not unlike a private equity business. They've got obviously their financial services arm, and then they've got quite a bit of industrial businesses. So that's always a factor to sort of play. But at the end of the day, if they're delivering superb results, that's also something that you need to weigh up. But it is certainly a niche opportunity, and they've got some very interesting businesses. I mean in that industrial space, they've got Rain, which is the LTE provider, which is pretty competitive, which is interesting. They've got holdings in EOH, and BKB, which is essentially like an agricultural sort of trader, if memory serves. So some nice businesses there. They also, on their financial services side, hold Alexander Forbes, and they've got that stake in A2X, which is essentially an alternative stock exchange, so the third stock exchange in South Africa, which is so certainly interesting businesses that they hold in their portfolios.
Another interesting business is Spur, celebrating 50 years of its existence in October later this year. But again, the company really seeing some pressure points with regard to its different divisions. But interesting to note that the higher LSM group, through its exposure through the Husal Grow, seeing some resilience coming through there.
Yeah, so that's really a nice acquisition that they made. I think it was 6 stores when they bought it over, and the plan was originally to close 3 of those stores, to keep the other 3, and now they've actually got 15 of those stores that are performing exceptionally well. So I think that grew north of 30%, which is fantastic. I think 34%, which is great. Obviously helped by opening new stores. But again, if you look at the overall Spur Corporation, that was down 2%, and really the Spur stake ranches, which is the biggest part of their sort of their stable of restaurants, which I think accounts for 300 odd of the 591 stores that they do have. So that's been a bit of a drag. But RocoMamas performing exceptionally well. That up over 75%. They've got over 50 stores now. So that's really performing well. And as you mentioned, this is a higher LSM sort of businesses which are performing well. But it's been a difficult year for Spur. In the last quarter they had that media fallout, and there were certainly financial repercussions from that. And in the quarter. Yeah, and management also made comments on the fact that they'd stopped discounting. So I think that also had an impact on revenue, but essentially making franchisees a bit happier, it would seem. So a bit of a sort of mixed bag. I quite like the portfolio of restaurants that they have there, but the stock, it's traded well above 30 Rand before, but it really is struggling to stay above there at the moment. And I don't think it's going to be an easier 12 months going forward. Put it
versus some of its competitors in the market, given that we've seen enhanced international competition from the likes of Taste Holdings, with international brands making its way through, and of course Famous Brands, which has a strong hold in the South African fraternity, but also internationally too.
Yeah, so they've probably got a smaller stable of different brands, and they've probably started a bit later in terms of diversifying their portfolio. So you could potentially see some upside. I mean, Famous Brands, which is it's a fantastic business, but historically it's traded at very demanding multiples, and in an environment like this, it's tough to maintain those, and it's also tough to continuously bring in these big acquisitions and to roll them out profitably.
Close off with, excuse me as I lose my teeth. What about Afrox, a much smaller player when it comes to the JSE and its operations, but managing to show some improved results so far today?
Yeah, so I think revenue was up about 6%, which is pretty good. I mean, in terms of the South African businesses that they operate in, I think if you have a look at it, the HEPS number was up 22%. So volume growth coming through their atmospheric gases business. Well, within that, the industrial gases. So management making the comment that there's really been some strong demand for the bulk gases, for the bulk products, which has really driven volumes, which is nice. And then management have done pretty well in terms of containing costs, and that's why you see that HEPS number up 22%. But just on the top line, I think a pretty decent result.
So very briefly, ACB, any surprises expected?
No, ECB, no. Unfortunately, I do think we were hoping for some more commentary around the strong euro. I mean, 120 on the euro dollar, that's pretty high at the moment. So we'll continue to watch in October for some more commentary around that.
Awesome. Thank you so much, Carl. We'll leave it there for today.
Thank you.
That was Carl Burgess, Portfolio Manager at Nedbank Private Wealth, giving us an update on some of the company results as well as macroeconomic climate and data that we can expect. Do stay with us. When we come back from the break,